What's up, YouTube? It's Ben, and let's talk about money. Hey guys, so it's Ben Nader. Thanks again for checking out another one of my YouTube videos. Hey, if you're not a subscriber right now, we talk about recruiting, entrepreneurship, staffing, business, finance, pretty much everything in between. If you like that kind of stuff, definitely smash that subscribe button. Go ahead and smash the like button while you're at it, because I'm about to give you some really good information. And with that being said, let's jump right into it. So the first thing that I have to tell you in this video is that I am not a tax professional. I'm not a financial advisor. I am not a lawyer. I'm not an attorney. I'm not any of those things. I have no certifications or claims whatsoever. So take this as entertainment purposes only. Like the title said, we're going to talk about money in this video, but specifically money as it pertains to your recruiting business, because there's a lot hidden underneath that we really need to talk about that we haven't talked about a lot on this channel besides the actual recruiting itself. All right, so the first thing I want to tell you about money and recruiting and finance 101 basically is, listen, you're going to get taxed, okay? Everybody's going to get taxed at the end of the year. Now, here's the deal with taxation. My first thing I want to tell you about it is that you should plan for it well in advance. I'm talking about 7 months out. 7 months before you actually have to do your taxes, you should be preparing for what you're actually going to write down on your forms, what you're going to submit, what your numbers are, all of that kind of stuff. This gives you the opportunity to maybe do certain things that you want to do, maybe spend money you want to spend, maybe buy things you want to buy before the end of the year, because they can become tax deductions. Things like your laptop, things like your phone bill, things like your home office space, all kinds of things. You can Google them all. All kinds of things can become tax deductions, and these are really what's going to save you at the end of the year. When you're staring at a tax bill that's enormous, more than you've ever imagined that you're going to have to pay Uncle Sam in taxes, those deductions are going to come in to save the day and lower that tax liability a ton to help you out. And that's why you need to keep track of all that stuff super early in the year, 7 to 8 months early before January, when you actually go in and file your taxes, if January, February, whatever you do. But bottom line, keep track of that stuff meticulously so that you make sure that you're on top of it. That directly leads me to my next point. Have a tax person. Don't be one of those people that just goes to H&R Block or whatever it is, TurboTax. Don't do that. You're a business owner, right? So you run a business. And with that being said, you need a tax person. You need an accountant, or you need what's called an enrolled agent. It's kind of the same thing, very similar. Those people are going to help you out. They're the kind of people that you can ask, hey, can I deduct this? And they'll know the answer like that. Don't go to H&R Block where they're just going to run your numbers through some kind of proprietary system that they already have set up. They're not going to check for specific deductions that you have. They're not going to be a business tax person, right? I'm putting it that way. So you want to pay quality money for a business tax person. On that note, it's also not going to be that expensive to have an accountant or a tax person do your taxes. So everyone thinks it's super expensive to have an accountant. It's like thousands and thousands of dollars. Listen, if you run a huge business and you have $1 million or $5 million in revenue, okay, yeah, you might pay a little chunk, right? But at the end of the day, if you have something reasonable, maybe, I don't know, $500,000 in revenue or under or something like that, you're probably going to end up paying about $1,000, maybe even $700, who knows, just to get out the door and have your taxes done and filed and finished. Let me go back to the beginning here before we talked about taxes, and let's go back to what you actually need to be doing when you're earning your money from your clients, right? Every single time that you get a check from your client, you need to put aside around 25% of that money into an account that you label taxes. Yes, go to your bank, set up an account, label it taxes, and say, every single check I get, 25% of this money goes straight into that account, like it doesn't even exist. So every $10,000 you get, $2,500 goes straight to that account. Here's the deal. You have to do this. Otherwise, at the end of the year, you can literally get screwed with not having enough money to actually pay your taxes. Obviously, you're going to have all those tax deductions. You're also going to have other deductions and things that will offset your tax bill, but you want to have a safety net. You want to have that 25% taken out, put into an account that you can utilize just to sit there, forget about it, don't even realize it exists, so that you can have it for when you need to pay your taxes. And you can be really, really happy when your tax bill gets lowered way down after all the deductions and you just have a bunch of extra money laying around in that tax account that you can use. What happens with the rest of the money? What happens with the rest of that money that you make besides what goes to taxes, right? That money goes straight into your business bank account. Now, if you're a really, really good business savvy person, usually you'll take that money and reinvest it back into the business, right? So you might start using a virtual assistant and start paying for that. You might upgrade some systems and software on your computer, or you might buy a brand new computer since you need one or something like that. You might reinvest in things that gain you more money rather than just buying things and luxuries and things like that that you don't need right now, especially if you're early on in the game. Reinvestment is ultimately the name of the game. If you truly want to build a long-term growing business that's ultimately going to give you tons and tons of cash flow, you absolutely want to be reinvesting back into the business like you're not even making that money. Let's say you have a $250,000 a year and you think that's an amazing year and it was awesome and that was great and you paid your taxes and then you spend a bunch of money. That's just a complete waste. What if you had a $250,000 a year, you paid your taxes, you took off your deductions, but you had all this extra money that you utilized and you put back into the business by hiring someone, maybe hiring 2 people, maybe buying some new things that would help you out in the business, just adding to your business, right? To make you $500,000 the next year, right? What will that look like? At that point, you're on track to make doubles, right? So at that point, you're literally doubling up every single year and you're on track to go to 7 figures super quick. I'm going to use this phrase that Grant Cardone uses all the time. He says, cash is trash. I totally agree with it. It's 100% true. If your cash is just sitting in a bank account doing nothing, right, it needs to be reinvested back into the business. Now, I'll just take a wild guess that most of the people watching this video right now are a single member LLC, and that is just perfect. That's just fine, especially if it's your first year in business. However, it's my recommendation personally, of course not professionally, because I'm not informed enough to do that. I don't have a certification to advise you of any of that, but it's my recommendation that you become an S Corp, essentially becoming an LLC-S. Now, this is something that you have to do and convert to by March 31st of 2022. By the time you're watching this video, whenever you're watching this video, the date is always March 31st of every single year to convert to an S corporation. Why would you do that? So an S corporation essentially gives you a couple tax advantages. One, you basically need to pay yourself. You pay yourself a salary. So you have a set salary, which is reasonable in the eyes of the IRS, whatever that is, right? So for a recruiter, maybe it's $50,000. For wherever you live, maybe it's $75,000. Doesn't really matter. Just needs to be reasonable, and that's that. To do this, you have to set up a payroll system. Something like gusto.com would be a really easy one, and you basically pay yourself weekly. So money comes out of your business bank account into your personal account, and they take the taxes out and money goes back in. So it's really, really simple. Happens every week automatically. It's a really simple process. By setting up an S corporation, you're helping yourself out on taxes. Everyone pays payroll taxes. So basically what this means is if you're a W-2 employee and you work for a company, you're getting taxed out of your pay. If you're self-employed and you have a single member LLC, you're getting taxed out of that, right? If you have an S corporation, you're paying yourself a salary. You set that salary, again, as I said, reasonable in the eyes of the IRS. Google it. And basically it takes payroll taxes somewhere around 15%, 15 to 20 out of that amount of money you pay yourself on an annual basis. With that being said, you're only going to get taxed that payroll tax on your salary that you're paying yourself. You will not get double taxation. You won't get taxed that payroll tax on all of the deals you're making, on all of the revenue you're bringing in, right? So let's say that you have a salary of $50,000. You'll get taxed 15% on that on your payroll taxes. But let's say outside of that, you make $250,000, right? You're only going to pay federal income tax on that money, but not that 15% payroll tax. Now, that's not the only advantage of becoming an S corporation. There's many other advantages of being an S corporation that I'm not going to go through now because there's just plenty of them, and you should probably talk to your tax professional about that. But I would personally encourage you to go the route of single member LLC first year, second year, turn it into an S corporation, and at that point, you're good to go. Tons of people ask me this question. Hey, Ben, can I pay myself, and how do I pay myself if I'm a single member LLC and I just have an LLC business bank account that is racking up a ton of cash? How and when do I pay myself? Well, you essentially kind of pay yourself whenever you want. It's called an owner's withdrawal. That's what it is. You're the owner of the business and you make an owner's withdrawal, right? So an owner's draw is another word for it. Basically what you do is you take a set amount of money, and maybe you do it once a month, twice a month. You do it similar to a W-2 job, whatever you want to do. But basically you take a reasonable amount of money out of that account, out of the business bank account, and you put it in your personal account. That personal account is probably attached to a bunch of credit cards, your rent, your utilities, everything you need to be paying out of your personal accounts. That stuff needs to go into your personal accounts. And so therefore, of course, you definitely need to take owner's draws out of your business bank account. You just can't take like all of it out in one draw. That'd be kind of stupid and crazy. Now, I just want you to know this above all: you will get taxed on every single penny that you generate. Gross revenue. That's the way the IRS works. That's the way our tax code goes. So you're going to get taxed on everything that you make gross. At the end of the year, your tax person is going to sit down with you and basically grab all your 1099 forms that you got from all your clients, from recruiting, any other 1099 or any other income form that you have. You're going to present all that information to them, and you're going to talk about all your deductions, and you're going to come up with an amount of money, and there's going to be a gross receipt. That means the amount of money that you've made in total for that calendar year. Then there's going to be an amount of money that turns into your actual tax bill after your deductions are taken out in between, right? So that's exactly how it works. Then you have to pay that tax liability. So if I could stress one main thing to you, it would be to keep track of everything, and I do mean everything. Everything that you buy out of your business bank account, everything that you buy for your business, everything that you subscribe to, everything that you basically just put in and out of your business bank account. Just keep records, whether electronic records, paper records. I like to keep both. Keep everything in one spot. Keep it all there. Maybe use one credit card just to keep everything organized that you use just for business, right? Keep all that stuff organized. Now, the chances of you getting audited are very, very, very low. However, if by chance you do get audited, and I'm not going to go through numbers of whether you make this amount or that amount, or and who's going to get audited, who's not, it's totally up to the IRS. But if you get audited for whatever reason, you want to have everything be defensible, right? What that means is basically have everything on record, be by the book, play by the rules, don't do anything bad, right? Don't do anything to be sneaky, you know what I mean? It's not going to work out in the end. Trust me, that will not work, right? There's no way to just hide your income. There's no way to do any of that. It's all in the bank. Everything comes in checks or ACH, so everyone knows what you make as far as the IRS goes, and you can't hide that. So you will be taxed on every single penny that you make, and you just need to know that. So that's a little bit of Finance 101 for recruiters, and especially those of you that are in your first year of business, right? That don't know what you're doing yet, that maybe need some help or maybe need some value. So if you did find any value in this video, go ahead and please smash that like button, hit subscribe if you're not a subscriber already, and that alert button so that you know every single time I release a brand new video. Until then.